Good afternoon. How are we all doing? How's everybody doing? Everybody surviving? Some squeezes going on at the moment. Weekly range just hit on the EuroCAD, just as I was talking about squeezes. EuroCAD. Oof. Look at that, 175 ADR. Blimey, nearly 200 ADR on EuroCAD. That thing's off the scale. Look at it. Euro pumping hard. Something's just happened to the euro. US government is currently unwilling to intervene on First Republic. That's from CNBC. We were just told this morning that advisors had lined up a potential purchaser for First Republic. And the US government has just said it's not going to do that. Not sure who actually lined that up. So, wow, look at that. Euro, something's just happened to the euro. That was good timing, wasn't it? Afternoon, Steve. Hot and sunny Costa Blanca. Very nice. Afternoon, Dariji. Tom. Australia. Crisp Australian night. That sounds nice. Afternoon, Alex. Pip from the Forge. London. Cool. Afternoon, Diamond. Fletch. I can't say hello to everybody because I'll be here all day. But hello, everybody. John. James. David. Figinia. Everybody. I'm about to blow my 100k. Oh no, Impulse. What's going on? If you're shorting the euro, that's a distinct possibility. Pound CAD ADR 150. Pound is rallying as well. So the pound and the euro both having a little bit of a push. Just quickly check out what's going on with these yens as well. So massive yen strength. This is all money flowing back into this yen again. Look. So we had that big unraveling of the yen this morning. We got a big, strong push up on the yen. It's just undone that whole thing. So there's something going on in the banking sector again, by the looks of things. Let's look at the hourlies. Not too much on the yen, actually, looking at it. It mainly seems to be the euro and the pound who are both getting the rally off the back of this. So. Can't spell. So I take it First Republic is a commercial bank. Where are they based? San Francisco. High net worth individuals, operates 93 offices. So it's US based. So what's the stock market making of that? The Dow is coming down. Nasdaq doesn't seem to be too unaffected by that. So looking basically for a potential pump on the Nas based on the stocks yesterday. So we had good earnings on Google. We had good earnings on Microsoft. So there's a good chance that we might get a pump on the tech stocks, but we'll see. We've got 3 minutes to the open, 2 minutes 20. So we'll see how those go. James, holy smokes, I can't close positions for the ADR alerts. Yeah, it's going a little bit crazy. So yeah, ADRs, we got 200 ADRs hit now. Euro odd, Euro CAD. Those are both 120. Well, one of them is a 125 weekly extension as well. So yeah, big moves on this euro. As you can see, lots of drawdown control going on, scaling out on these. Big moves. Not quite sure why this euro is getting so much. All this news of this bank seems to be affecting the European pairs more than the US for some unknown reason. I don't quite know why we're getting such a reaction off of these. Don't know whether First Republic have got a big European customer base or something, maybe. I don't know. Certainly a lot of money has been converted into pound and euro for some reason. Pound US dollar, 125. There we go, we're on it. So the US dollar weakening by the looks of things. A massive rally into Swiss franc as well. Money flowing back into the Swiss franc again. Oof. Big moves everywhere. And Australian dollar. So Aussie dollar at the moment not doing too much really off the back of the news. That's the Swiss franc pushing the Aussie dollar down, and the NOE pushing the Aussie dollar down. But the Aussie dollar basically hasn't done a huge amount. So we had that drop this morning on the news, but since then it's really just gone sideways most of the time. So no dramatic drop on the Aussie. Afternoon, Neo. And of course, I'm in both of those. Yep. Certainly learned how to get into a squeeze. Yeah. That's where your exposure becomes important. Quite. Well, let's have a quick look at these US stocks on the open. We've got, 5 seconds. Big pre-market drop there on the Dow. So the opening range on the Dow, the pre-market opening range on the Dow is there. Nasdaq's not doing a huge rally. I was expecting a big fast pop, but we'll give it a couple of minutes, see how that goes. Please don't a runner. No, I'm still here. Labour market in the euro is very good. That may be. We haven't had any news on the labour market. Okay, so Nasdaq not really that volatile on the open. So we had earnings. Nope, wrong one. So we had earnings yesterday on Google and Microsoft. Both came out as positives. So we'd expect some kind of rally at the open. But obviously we've just had that news on the banks. So that might actually have an impact on this. We'll see what happens. Dow's opening fairly bullish. Nasdaq's opening a little bearish. So looking at levels on these today. This is the run that we had end of day yesterday. So this is obviously based on the earnings that we had from Google and Microsoft. That's left a big propulsion gap, which has been tested and they've rallied out of today. So we've obviously got these big old propulsion gaps to the upside as well. So if you look at the hourly on the NASDAQ, where we are at the moment, we've got targets to the upside and the downside. So very difficult, again, to pick a direction. Always is with this because we get lots of big moves up and down. So your targets on the NASDAQ today, obviously ADR is the obvious one, which is yesterday's low. Upside could be anywhere. Anything up to 200 ADR, basically. No real way of picking an upside target. But if we're going short, to be watching yesterday's low. If you look at the DAX this morning, we had that big sell-off on the DAX where we ran down into that support. That's where I got out there. And obviously, then we got that W pattern pulled straight back up to where we were. So again, no progress. We had a big move, but no directional bias. Exactly the same as we've had on all these indices. There's a lot of intraday movement, which is obviously very choppy and very hard to trade, but it's not going anywhere. We are literally sideways, and we have been for 7 days. So yesterday was the first day we actually made a run outside of those lows for the last couple of weeks. So potentially continuation short is on the cards today, but we'll see where we go. Oil, we had that drop on oil. So the gap fill is just about to be done, literally just about to be done. So there you go. So there's your gap fill. So this is where I'm going to start looking for buys. So I've got short on, and I haven't got short on. I got out my short. Lied. Well, didn't lie. I just didn't tell you. I got out the short yesterday on that at that level. As we put in that triple bottom bounce and pushed up, I exited that short. So I got into the short up there, added to it there, and got out down there. So that was a really nice short trade for the gap fill, but I couldn't hold it to the gap fill because we had a double bottom. I went into, I lost a lot of the profit there. Didn't lose a lot, but obviously drew down on the profit. As we came back down and bounced again, I took it off. So the gap fill is playing out. So I'm looking to flip long now on oil. So that 4-hour move that we were looking at. So that push up to here which is where I was looking for the pullback, and we got the gap up. The gap is now filled. So as I said this morning, so the play on this is either the gap here, as soon as that gets filled, look for longs to break that high and jump up to $95 a barrel, or the option is to come back down into these areas here, which is that previous monthly high, and then take a bounce there. So if you want to position trade this, just about to get into first entry, and then you could scale in on the way down and then hold a position. But this is kind of a swing play. So this is a really nice swing trade because we're expecting 95 to 107 a barrel still on this, which is all the way up basically to these highs. That's where the forecast is anyway. So your structure on oil would be something like that, or potentially that. So really good spot coming up on oil if you want to get into any longs. Drop down M15. Just wait for that reversal alert to the upside. I'll probably use the 15-minute time frame here, or possibly the hour. Depends how long you're going to play it for, but obviously the hour is a little bit further away. 15 minutes. So as soon as we get that gap fill, which is literally ADR, that's done. So that frees up, I reckon, a load of limit orders to trigger there. But we'll watch and see what happens. Afternoon, David and Daniel. Morning, all. Selling the US 30. Look at the Nasdaq. So your pre-market 15 today was there and there. Bit tight, that 15. So that's a double-ended whipsaw again. Again, same thing. We're seeing a lot at the moment, these double-ended stop hunts at the open. Cash balance is in. So that's your 5-minute opening range. So that's what we're playing a break of typically. So at the moment, looks like the Nasdaq wants to go short. Dow undecided and back in the middle there. So let's have a look at these ADRs today. So there's a lot of them. If you look at the RSI dash, lit up like an absolute Christmas tree. So there's a lot of movement going on at the moment off the back of these banks. So we looked at most of these this morning as they were unfolding, but they've obviously moved a lot more since then. So let me just move my laptop out of the way. So Aussie dollar Swiss. Let's pull out and look at these a bit higher up. 15-minute chart. So big drop on the Aussie dollar Swiss down to 150 ADR. So again, that's not the hourly. Let's look at the hourly on it. We're extended on the hourly again. So we got extended down here and got embedded. So this thing hasn't stopped basically for 3 days. This is the 3rd or 4th ADR in a row, isn't it? Already got 44. So we put in a 53 there. We put in a 42 there, so pretty much ADR. We put in a 50 there, and now we've just put in a 71. So basically 4 days solid ADR. So this Swiss franc is on fire at the moment. Obviously, with the Aussie dollar news that we had this morning being mixed and kind of a little bit more negative, but I'd say that's more neutral, really. We've had a drop in the Aussie dollar and obviously that pump in the Swiss franc as well. So money is certainly running for the hills at the moment. When the fear and greed index comes in, I would imagine, we haven't had it today, have we? We were in greed. I would imagine that is going to be swinging back more neutral now. So that's absolutely exhausted. If you look at this on the 4 hour, we're way down below the 20 level. I've just lost my line. On. I'll put those on the 30. So, yeah, big extensions. As you can see, we're all the way down here. Yeah, so this is basically what we're waiting for, and we're waiting for it to figure out when it's going to happen. So at the moment, massive movement on this Swiss franc. So good opportunity to get in long, but you are probably already in it. So as you can see, been scaling out on DD control on this Aussie Swiss because it's absolutely exhausted. So 150 ADR. Aussie dollar yen has pushed down again. Again, yen strength today. Obviously, with the Aussie weakness, that's pushed down a little bit. We only just tapped into ADR on that, so not a very big one there. Had Swiss as well. That's off the charts as well. Back down. Look at this. Absolutely monster move. Same thing as the Aussie dollar Swiss here. So when we started that move, we put in roughly an ADR. That was over an ADR. That was an ADR. Not quite 39, just short of an ADR. Yesterday was where we sort of saw the first pause in that one. But again, collapsed again today. This is the impact of this news. So obviously whatever's going on with this First Republic, paused for volatility after sinking. So they've paused trading on it. So blood in the water today. Not a huge reaction. Where's First Public? Where are they listed? Which index? Come on, which index are you in? Anybody know where First Republic is? It doesn't say where it's listed. NASDAQ, right? So it's a NASDAQ stock. Not having a good day. Geez, look at that. $8.50 down to $6. That's not good, is it? Not having a good day there. So was at was trading at $16, now trading at $8, 50% of it gone. So that's NASDAQ. Had Swiss on, aren't we? So that would explain why the NASDAQ isn't pumping off the back of the positive news that we've had with Google and Microsoft. So kind of cancelled it out, hasn't it? I would suspect if people start buying that stock up cheap in First Republic, because they're going to get bailed out, that will probably fly, but we'll see. Right, CAD Swiss. So that one we've looked at. Euro odd. So all these euros. So we've got now 200 ADR on Euro odd and Euro CAD. So huge push today. Absolutely huge push today. Screaming up to those highs. Obviously, propulsion gaps everywhere to the downside. Not quite sure why this European currencies are being pumped quite so hard. I can't see any news apart from what's going on with this First Republic thing as to why that would be happening. Inflation figures coming down in Germany, which is kind of to be expected, but there's no other news. So I'm not quite sure why we're getting such a massive pump on this. So Euro odd and Euro CAD, massive ADR extensions. So again, if you're looking to do aggressive drawdown control on these, this is where you want to think about doing it. This 1, 2, 3, 4, 5, 6, 7 days solid now, and this is obviously 200 ADR today. So this is where you want to be thinking about getting into aggressive positions, but you want to be waiting for some kind of weakness on this, which we're not really getting at the moment. So 5 or 15 minute reversal alerts up here. You're not going to get a reverse alert on this for 50, so half an ADR basically. So a bit tricky to get into those today. Euro CAD, Euro odd, so both the same, pretty much the same movement on those. Euro Swiss, massive extension again to the upside, 170, 150 ADR we got up to this morning. Since then, we've literally just gone sideways. So sitting on that one at the minute, 150 ADR. That's not having as much movement. Euro Swiss is 36 ADR. The Euro Swiss moved together. So obviously, these will kind of cancel each other out to a certain extent. But you can see, obviously, the euro is what's been in charge today. So this euro is what's getting the lion's share of this. I've got a feeling this is probably the market factoring in a 0.5 increase next week. So next week we've got the euro rate, which is on Aussie euro on Thursday. So we've been talking 3.75. ECB came out last week and put the case forward for a 5.5 increase, which would take that up to 4. I get the feeling the market has factored in 3.75 and now is trying to factor in 4. But I haven't heard anything from people like Goldman Sachs or anybody calling a higher rate for the euro. So I'm suspecting it's possibly something to do with that. That's dragging the pound with it as well. But again, can't see any news on it. So Euro Swiss 150 ADR, that is still pushing at the moment. So look for areas of support resistance to the upside for potential bounce points to jump in short. Euro Yen, that's extended 125 ADR after that big yen drop. So that's basically completing these propulsion gaps. We've got one more to the upside there. It'd be very difficult for it to reach that today. That was a 200 ADR move yesterday. So if this yen is going to continue to receive money off the back of the safe haven run, which is what it looks like there seems to be at the moment because the Swiss is moving, then we could see a continuation short on that, but it came off of that weekly low. So difficult to tell where we're going to go from here. We're in an expanding wedge. Very, very hard pattern to trade because obviously you could put in new highs or new lows from the center there. So it's very difficult to take a trade on that side, that type of pattern. But we are extended to the upside. We're not extended on the RSI though on that at the moment. Euro New Zealand 175, again big strong push to the upside on that one. Euro US dollar, huge push on that. We've got US dollar weakness along with this euro strength. So we've just taken out that high from the previous week. So 150 ADR on that. So if you drop down to M5 on that, you're not going to get a reversal alert again because of that massive push. So this is what's confusing me about this. This is the move which we got on all these euro pairs when that First Republic news hit. So why that has actually moved so much on the euro, I'm not sure. I can understand the US dollar weakening off the back of it, but not the euro pumping. So it's a bit weird price action. I don't quite know why that's moving so much. But so yeah, looking for a drop basically on that one as well. Pound odd. Where are we? It's all the euros, isn't it? Yeah. So pound odd, pound CAD, pound Swiss, pound yen, pound New Zealand, pound US dollar. For some reason, updated. Quite sure why that's not updated. There we go. So all the pound pairs, starting at the top, pound odd, big push, 175 ADR. Again, all these big propulsion gaps coming. These will all come down really fast when they do, but not sure when they're going to stop at the moment. So big, strong push, 125 ADR there. Sorry, 150 ADR. Pound Swiss, 100 ADR. That's come off quite nicely. So the pound and the Swiss, both strong pairs, cancelling each other out, as you can see. Oil, ADR. So there's your gap fill on oil. Let's just do these pounds. Pound yen. Again, money coming into the yen. Strong pound, strong yen, more sideways movement. And pound New Zealand and pound US. So all of these huge, huge, huge strong pushes at the moment, leaving big propulsion gap targets to the downside. Quite when they're going to turn, though, is another matter. So looking for levels of support resistance, basically, to take positions on those. Pound US dollars 125, as we know. Well, that's just signaled again. Oil. So that'll be your gap fill done. There we go. So there's ADR. And there's your pretty much gap fill. I mean, don't have to worry about it to the pip, but so there we go. So that's where we got in short and a break where there's multiple times I was saying there was a short opportunity for the gap fill. So loads of ways to get into that. So this is what I'd be looking for longs now. So dropping down. 76.40. So I'm just going to place a pending order just above that 15-minute reversal alert. So that 15-minute reversal alert is pretty much bang on yesterday's low. So I'm putting a pending just above there because the EA is not trading this to try and get into start a long position basically, but just going to take the one entry on it. So start with. Okay. So there's oil. New Zealand dollar Swiss coming down like a house of cards. Again, ADR on that one. Massive propulsion gap targets to the upside on these. So huge, fast squeeze. The speed of this thing has been unbelievable. So pushing back up into all those propulsion gaps at some point, and US dollar Swiss, but same thing. So that's a beautiful entry long on that US dollar Swiss. So they've just taken out that weekly low from 2 weeks ago. So beautiful support bounce there. And we're just potentially pushing back up on that. So news tomorrow for US dollar. We've got, that's next week. So we've got the GDP figures tomorrow at 1:30, and then we've got unemployment claims. So those are what's going to move the US dollar tomorrow. So if we get positive figures on both of those, we get a nice big rally on those. And then the next day, we've got the Canadian GDP along with the PCE after the yen news. So potentially good moves for the US dollar tomorrow if we get some positive news. So good spot to start looking for long opportunities to play this range on the US dollar Swiss. However, we got these problems with these banks, and you know this is the second time in as many months we've had a small banking crisis turn into a very big run for the hills. The market's very jittery, as we know. So any sign of the banking sector having any problems, and the Swissy and the yen are the main beneficiaries. So just be a little careful with Swiss franc at the moment. RSIs, pretty much everything. Huge movements across the board. Obviously, the pounds are the main ones. So we'll have a look at these, the main big ones. Let me just quickly check what's going on with Dow. There's no breakout yet. No breakout anywhere. So it's a short basically on the Nasdaq. It's double bottom on the Dow. So there's no entry yet on the opening range break, but the Nasdaq is a short, but not going anywhere at the moment. So markets are not really impressed at the minute. Very surprised there's no movement on the Nasdaq, to be honest, after yesterday's earnings. But I guess what's going on in the banking sector. Eek. Michael Smith squeezing lemons, squeezing currencies. Oil hit ADR. Yeah. RSI, do you mean, Steve? The 4 hour? Not quite extended on mine yet. ADR, obviously ADR isn't time-based. ADR is any time frame. It's all the same. What does the Swiss, what does it do to the Swiss yen if the market is running to security? Well, they are both safe havens. So you tend to find you get sideways movement because there's no, excuse me, there's no massive advantage either way on it. So obviously everything against the Swiss franc comes down, everything against the yen comes down, but the Swiss yen, obviously, because there's money pumping into the Swiss and pumping into the yen, you'll get a lot more of a sideways movement. However, obviously, if one of those is stronger than the other, so if you get more flowing into the Swissy than you do into the yen, then obviously the Swiss yen will push up. But you'll be looking at sort of getting an ADR maybe on it. You won't get these huge 200 ADR moves because money is flowing out of the other currencies into the Swiss franc and the yen. So basically, when the safe haven runs happen, it's basically money being pulled out of other currencies and out of the stock market usually and put into safe haven currencies and gold. So you'll probably find gold has had a nice big rally today as well. Big-ish. Bit of a push, not a lot. But you can see yesterday, that was when we got the yen strength yesterday. This is the Swiss franc strength. So you'll get money flowing into that as well, because obviously gold is also a safe haven. However, it's less of a safe haven now than it was, because a lot of the gold is in Russia and we can't get it out because it's an import-export ban. So there's less of it going in there than there used to be. In the old days, you used to get a lot of money flowing into the into gold. But as you can see, we did get it on the Swiss crisis, because obviously we couldn't put money into the Swiss franc because Credit Suisse was one of the banks that had the problem. So you couldn't pump the Swissy on it. You had to drop the Swissy. So money came out of the Swiss franc and had to find somewhere to go. That's where it went into gold. So it's all interlinked. The trouble is, you never know which way it's going to go. When it's going to happen, when these problems occur, you suddenly see everything start to move, but you don't know which one is going to be the beneficiary. So less so these days gold, but it will still, especially if there's trouble in the US, it tends to pump into gold. But obviously that's because it's a cross. Apparently Mamba FX bought his 20th exotic car. The markets are pissed. Is he? Let's have a look. It's brilliant. I love his face. Look, you couldn't make it up, could you? People fall for this. 256,000 subscribers. Look, does that shout I'm a professional Forex trader to you, or does it shout I'm a YouTuber wanting to make my income out of YouTube? Just saying. And his girlfriend, look, taught her to trade. Obviously, it's that easy. I taught my kids to trade during the summer holidays. But anyway, right. So there's not a lot of movement there. So these RSIs, let's go through the RSIs. Aussie dollar Swiss, obviously 4 hours. We'll look at the 4 hours because those are the biggest extensions at the moment. So everything on the left-hand side here is 4 hour RSI extensions. So we look at these four here. These, what, 1, 2, 3, 4, 6 there. So these are your biggest extensions at the moment. So the biggest squeeze is going on. So Aussie dollar Swiss, change that. So Aussie dollar Swiss, as you can see, we are down to crazy levels. So there's your 20. God, that was a good shot, wasn't it? And let's do the 80. So your 20 level RSI on the Aussie dollar Swiss, that's the only time really we've surpassed it, which was that big strong push there, accumulation, drop, then we got the pullback. So the question is this the first of a two-leg drop, or is this just going to pull straight back to the 24 and back up into that resistance? So that's the question at the moment. It's very nicely extended. So again, when you're looking to do aggressive drawdown control, these are the points you want to start looking for those positions. But personally, I like to have a support resistance level to play at, and there isn't one. So we're out the lows here. The next stop on this thing is just miles away. There's nothing, basically. It's not going to free fall all the way down to there, but there's no real support to look at. So it's very difficult to pick a spot to try and get some levels to try and get that aggressive move on. So you just have to take reverse alerts as you see them, basically, and hope that that is the point. So 15-minute time frame is probably your best bet, and obviously just take aggressive positions as and when you need them, if you need them. This has only got 4 positions on, so not the end of the world on it at the moment. Average isn't too far away on the H1M5, but still not a bad spot to do it. 150 ADR, so that's nicely extended on the 4 hour. The CAD Swiss, so this is the one that's been collapsing at a rate of knots, because we've had that weakness in the Canadian dollar based on oil, weakness in the US bringing the Canadian dollar down, and the Swiss franc going absolutely crazy through the roof. So that was our flag yesterday. So what we thought was potentially going to turn into an inside bar reversal and push back, turned into be just a flag break. So again, there's no real support on this. We're out the lows. We're in free fall mode. So it's just a case of waiting for the market to run out of steam to put that pullback in, which we will get. It's just a case of when. We need to wait and see what happens. If another bank falls over, you're probably going to find the Swissy is going to benefit again. So need to keep eyes peeled on the news at the moment. Euro odd. Huge extension to the upside. We've had 1, 2, 3 down candles on this since the 20th of April. We're on the 26th. So we've had 12 hours basically where this thing hasn't been going up through the roof, the euro. Euro is on absolute fire at the moment. Again, out the top on the 80s. Levels very rarely seen. Very nice pullback there off the back of that. We haven't been up there for a long time. So again, waiting for that pullback to the 24. The further away we get, the more stretched we get, the faster that snapback tends to happen. So again, if you need aggressive on this, there's 5 on that at the moment. So if you need aggressive drawdown control on it, this is where you want to be doing it. Just dollar. Drop down M15, wait for that reversal alert, or M5 if you're feeling it's the same place because of that push. If you're feeling aggressive, but yeah, so that's nicely extended to the upside off the top. We've also got EuroCAD. Huge extension. Again, going back, this is an area we've not been to before. So something absolutely catastrophic going on with this euro at the moment. Really struggling to see what the news is that's causing this. Aspects of the EU fiscal rule. No, it's not going to do that. Bizarre. We've not got the fear and greed index yet either, have we? Meta set to report first quarter earnings after the bell. There you go. So after the bell. Maybe, maybe not. So yeah, EuroCAD, huge extension, pulled back, pushed up again. So you've got divergence there. Very nice divergence on the EuroCAD. Bearish divergence. So there's not a lot of strength in this. We're basically running out of strength. This is basically flying on light liquidity. So we've got so much movement to the upside. There's nobody left to sell to. So the market's having to push further to find those sellers to fill their orders. Eventually they're going to run out and that's going to come back very, very, very fast. But timing, very difficult. Pound odd and pound CAD. So this is exactly the same situation with the euro. Beautiful hammer just formed, or rather shooting star just forming on the pound odd. So that's a good looking short. 15-minute reversal alert just about to go in. So if you want an aggressive drawdown control position on that, there's a nice entry on the 15-minute. Stop above that high, which is above 175 ADR. That would be a good aggressive position if you need an aggressive on it. And the pound CAD, same thing. We've got a pullback off of 150. And again, 4 hour, just above the 80 level now. So looking for some kind of pullback on that move. But look at the speed of this, parabolic. This, the speed of this move and the fact that there's been very, very little pullback on it. Very similar to that move that we had there last time we got back into the 24.72 zone. But Canadian dollar just got hammered basically exactly the same time as we got these rallies. So, and that's it on the 4 hours. Hourlies, you've got a couple as well. Euro odd, Euro CAD, same thing. And Euro New Zealand as well is very extended on the hourly at the moment. So just got above that 75 level. Just come off of 175 ADR. So again, drop down M5 opportunities for shorts there. But huge, huge moves everywhere. Guido. T-shirt idea. Market structure traders like to enter several times. I like it. I'm not sure. I'm not sure that one would get through the t-shirt. Guys, basically, you have to come up with a graphic for it. That's one we should ask the AI. Or fake views and subs. Yeah, probably fake views and subs. You're talking about the Mamba FX. Yeah, more than likely. Guido, sorry for the inconvenience in my question. Where is the RSI configured? Where is that RSI configuration you're using? It's just the RSI. There's nothing special about it. It's just an RSI. Stock RSI that comes with your platform. So I'm just using here because it's an hourly. This is on the 21 median. Levels you can set yourself. Obviously, you can add as many levels as you want. So that's it. Use 14 or 21 RSI. I should use the 14 actually because the RSI dash is set to 14 at the moment. Yeah, it's nothing special. Diamond, it's this kind of thing that makes me question the utility of fundamental analysis, which seems like voodoo to me. What I can see on the chart is real. Yeah, exactly. The trouble with fundamentals, again, is that, as I've said before, they are a lagging indicator. Yeah, so the fundamentals are historical. What has happened to interest rates? What has happened to the change? What has happened to inflation, GDP, etc.? It's what's going to happen in the future, which is what the market is predicting. And this is the bias. So as long as you've got COT in line with you, you should be fine. So US dollar CAD, that's the plus 10 at the moment, going up. So if you stay in line with this, and obviously I haven't been staying in line with this basically over the last couple of months because we've been mainly range bound, but we are getting a lot more stronger signals now. Thanks for the follow, Connor. Welcome aboard. So it's probably a good idea to start moving in line with these now to just basically try and keep yourself aligned properly with where we think the fundamentals are going. But these fundamentals are going to change as we hit these terminal rates. So it's very difficult to kind of gauge when this move is going to happen on this US dollar. It's likely to come down at some point soon. But the other thing you need to bear in mind with this US dollar as well is if it does start to weaken and everything else starts to weaken alongside it, the US dollar is still going to be stronger than the other currencies as well. So difficult one to call, isn't it? Gulam, do I only trade demo? No, I only don't trade. These are demos. This is the EA running on all the accounts on the VPS. Basically, it's taking every trade. So you can see every trade it would have taken. Loads. So a lot of drawdown control going in at the moment, as you can see. So negative month on the H4 set file, H4M5, basically off this squeeze. That's what drawdown control is there for. You're going to have losing months. This is going to be one of them at the moment, but we're just waiting for this all to unpick, basically. Sailor V. Afternoon, Jareska. John, in the MREA, can you set a stop loss by either setting a financial amount in money or by number of positions? Yeah. Set a stop loss. You can't do it by number of positions, but you can do it. You can do it on amount of money. So in here, so your stop loss, depending on how you want to set it up, you can do it in a number of different ways. So obviously, if you use a fixed stop loss, yeah. So if you set your stop loss to whatever you want to and use a stop loss and you risk an amount of money, then you can do that. So you can risk, you can risk either a fixed lot or a percent. So for a percentage, so for example, if you're trading a 100K account, and you wanted a risk 500, you would go 0.5. So that would be $500 risk at whatever you want to. The other way you can do it is if you want to use a false stop loss, you can get it to exit per trade. You can do partial drawdown control per trade at a specific level, but the drawdown percent to close you can set to 100. So you could say when we've moved a percentage away, close the entire position. The other way you can do it is where am I? On your targeting, so your basket trading settings, you can set this to close in loss when at X pips, or close all when X money in profit, or close all when X money in loss. So when it gets to 500 in loss, it will close the position. That's if you don't want to use a fake stop loss. Go and read the manual about this part and your partial drawdown control. So those are your options. So if you're not using a fixed stop, those are the ways you would close it out, either on money, on distance traveled, or whatever you want to. So those options will allow you to do both of those, yeah. But there's multiple ways to do it. So you just pick the one that suits you the best, basically. Need to watch what you ask, AI. You might get some of those thumbs. Yes. Brian sent me some other thumbs. This was a particularly good one. I can't remember what you asked for on this one. Yeah, stock chart background with John Wick. This is what it came up with. So we know it has a problem with fingers, but it's got a very big problem with a thumb there, hasn't it? I'm not quite sure where it got that one from, but yeah. I'm not going to zoom in on it, but you can imagine what it is. Afternoon, Tamo. How goes it? Right. So let's have a look at what's going on with this. Oh, right. Dow's collapsed out the lows. So there's your opening range breakout today. 5-minute ORB is there. There's your break. Big drop. Just coming down to test these lows now. So just watch these lows. Nasdaq, however, is holding. Nasdaq's broken out to the highs. So looking at the Dow, where are we going on the Dow? So Dow, yeah, basically your next support is ADR. So we got that area there and that area there at 125. So if we're going to drop on the Dow today, we're looking at somewhere between a 100 to 125 ADR. If we're going to put in a support bounce, obviously this is where it's going to happen. So limit orders triggering here at the moment. They are buying this up. We got very few targets to the upside. So this big propulsion gap that we put in, this was the break of this entire accumulation for 4 days. So this was the move that put in that breakout. So it's come and tested it multiple times and been rejected. And now we're rejecting these lows potentially here. So if these lows break, there's absolutely nothing to stop this down to 100 to 125 ADR. So you've got potentially from here, somewhere between 113 to 120 point move. If this is going to hold, potentially we're going to do a gap fill. There's this tiny little gap left back up here. Look on the Dow. This is from a couple of Tuesdays ago, which is up at 200 ADR. So I would say that is a contender to be orphaned up there. And for us to break out this low. So it looks good for shorts on the Dow this afternoon, but we need to get this low broken. So bear in mind, if you're jumping in here, you're chasing it. So ideally, I'd be waiting for a pullback to jump in short and then add as we break that low. So the ideal trade here would be for this to hold, us to push up back into there or there somewhere, and then take a short there, add a second position there, and then trade it all the way back down to ADR this afternoon. But we will see where it goes. Nasdaq certainly doesn't seem to be playing ball at the moment, although it is starting to roll over now. Good signs of rejection up at the highs. So if the Nasdaq starts to come down with it, that will drive the Dow down. So looks like a good short today. Smash the like button, as Steve just said. Right. So huge moves everywhere. That's all I've really got for you today. I've got some coding done today. I've just pushed out an update for the indicator this morning. So any of you that have got the support resistance indicator, that update's just been pushed out today. So you now have control over the spacing here between the note if you're using it, which not many people are, but some people are. And you've also got control over the color of the text when there are no trades on. So if I just change that to black. So that text you now have control over. And I've added buy and sell text so you can see which of these there are. So some people who are hedging were getting a bit, not confused, but you can't tell which one was which. So now you can tell that this is a sell, 120 pips in DD. There is no buys on. So that's just been updated as well. So that's been pushed out this morning. MT5 version of the indicator is being worked on. So there's a few problems, as there always is with MT5. It never works correctly. Somebody needs to make an MT4 to MT5 converter that works, because there's lots of scripts out there that will do half a job. And someone who comes up with a website that automatically converts MT4 into MT5, be an absolute godsend. Bane of coders' lives is trying to get stuff working. You can get everything converted and change all the language over, no problem. It never works, though. Just a pain in the backside. So there's a few bugs which are being worked on it, but I will be on it. So hopefully, fingers crossed, this week I can get the MT5 version of all this out as well for those that want it. But I think most people are using MT4 anyway. So I'm going to get on and carry on working on that. That's all I've got. Anybody got any other things they want to look at? Any other pairs? Anything else they want to discuss? Did you ever finish the end of day EA? What was that? End of day EA. You mean the sentiment one? First profitable close. Yeah, so I mean that's kind of I've been working on a few EAs that use that first profitable close. So I've got use first profitable close exit in my basic EA now that I use to test everything. So and you can obviously select what first profitable close you want. But with the sentiment EA, I didn't find a strategy that I could execute with it, and other things took over basically. So I haven't actually progressed that any further. So the sentiment EA basically obviously was trading on sentiment. So what I struggled with was dealing with the sentiment shifts when they happen. So the problem is the sentiment shifts happen too quick sometimes and you get stuck in it. So I was trying to find a way to position trade the sentiment, and I'm not sure that it's actually possible. It's because what happens is if you take trades in line with sentiment now, so for example, Aussie, CAD and New Zealand dollar Swiss, you want to be shorting them, yeah? Because retail are longing them. If you get in at the point where it flips back the opposite direction, what you tend to find is you're extended on the RSI. So these types of trades were giving no different entries to an RSI extension, which I already have an EA that does. So combining that, I couldn't find a way to position trade it. So I think what needs to be developed with this is a stop loss based strategy. And my next job on this is to basically look at entry criteria to get in. So I was using yesterday's low, last week's low, previous weekly and monthly support resistance levels to enter. But I found that there was a problem with the pullbacks. They weren't getting pullback entries. It was working to a certain extent, but it was missing so many trades. So that didn't work. So I think what we need is some kind of price action entry system on it. So maybe something as simple as bullish engulfing, bearish engulfing on a 1 hour chart, just to get us in the direction when we've got signs of strength or reversal alerts. But when you get a bullish engulfing on the hourly, what you tend to find is on the M15 chart, you've had a bullish engulfing, or something like a moving average cross, like a 9MA or a 5MA cross, something like that. So it's on my list still. It's here. Look, there it is. Sentiment V2. This is the EA in development. But I just haven't had a chance to develop it anymore yet. So it is still working. And I think I got as far as putting the... did I put first profitable close? No, I hadn't put... Yeah, I had, yeah. Yeah, so I put first profitable close in there. But yeah, it's just not... Struggling to find a strategy with it. I think it needs a stop-loss based strategy. And obviously, as you know, stop-loss based strategies are incredibly difficult to develop because you get stopped out a lot. So I think the best way to trade sentiment is to use a wide stop. So I was looking, what's on my little notepad is, I say my notepad's over there on the screen, which is why I say I'm looking at my little notepad. It's actually there. So what I was looking at basically was using somewhere in the region of a 0.5 to 1 ADR as a stop loss, but a first profitable close on the 4 hour candle. So getting into a trade in the direction we want to be, which in this case would be short, obviously on the Swissies, with a wide stop. But that wide stop basically has to either trail to reduce risk, or we need to use a high risk reward. So something like a 1.2 to 1.5 R, because these could be trend or mean reversion. We don't know. We want to be in and out fast, but I couldn't find a combination that was actually working with it. But then again, I haven't looked hard enough. So if anybody's got any ideas on it, feel free to chuck them over. Gold, Yarp. We haven't looked at gold. You're quite right. Gold is coming. No, we haven't looked at gold. I think you missed it. I looked at gold earlier. I didn't really give any analysis on it because I have no idea. It's pretty much the same as this morning. So if you go and look at the replay this morning, I was about here. It's exactly the same. We're either going up to that one or we're going down to that one. I don't know which, but it's 125 ADR in both directions. Up or down, one or the other. US dollar at the moment is fairly weak, which is why we've had that spike. But obviously, it's just undone. There's no direction. I mean, no one can give you any directional bias on it because it's 50-50, isn't it? So it will go up today to 125 or down today to 125. I'm not saying it's going to get there today, but it will start its journey one way or the other. News is tomorrow. This is why we're going sideways, because we're just waiting for the news. I think so. David, you stated yesterday that there was another strategy you were working on. Yeah, well, I've always got loads of strategies I'm working on, which is why I'm kind of trying to keep the live runs short at the moment so that I can get some work done on strategy development, because I haven't been doing it for ages because I've been in the live run too much. Yeah, so basically there's a couple of strategies. One's a support and resistance based one, and one is a propulsion target based position trading strategy. In cases like this, Aussie US, for example, when we complete the final propulsion gap to the downside, we will be left with nothing but propulsion gaps to the upside. Therefore, it's a long. So it's not going to use any kind of indicators whatsoever. It's going to use propulsion gaps. And when we have a kind of a single direction propulsion gap target, start to look for trades in that direction. So let's say, for example, here on the Aussie US, we push down here today and we hit ADR. When we hit ADR today, that propulsion gap is going to go grey and close out. Yeah, so it's gone, which leaves us with nothing but upside targets. So I'm developing a strategy to auto trade. Well, not to auto trade this, but to test this strategy. You can back test it. I mean, you can see clear as day, everything that is grey to the left of price now is a target that's been hit. So if you were to just trade from propulsion to propulsion, you could not have gone wrong. Since March, beginning of March, you had 100% strike rate because you would have always hit the propulsion targets because every single propulsion target was complete. So that's what the strategy is going to be based on. But the logic for getting in is what I'm still finishing off. And the targeting is what I'm still finishing off. Because here, for example, we have a full expectation that that will get completed. That, and that, right? So best case scenario, as we can see in the past here, every single one of these propulsion gaps is complete. Yeah, hasn't left one. However, we know that it does orphan propulsion gaps sometimes. So it's a case of basically, what do you target? How do you target it? And how do you choose which target to select? So I'm working on the theory of position trading into it. So if I take an entry when this gap fills long, for example, and it accumulates and drops, that is my target. If I take a second entry, I need the closest propulsion gap target to be my target still. Highly likely we're going to do this, but I don't want to be greedy. I just want to be right as much as possible. However, what I'm finding when I'm doing the testing is that the main thing that makes a difference, as you can see, is how filled they are. We got all these orphaned ones at the top here. So if you were trading into these, you would have been trading into them from here, here. You're still longing it, waiting to get back up to these, aren't you? So what we've got to do is keep an average and make sure that when we get back to somewhere above our price, we exit. So the problem I think we're going to find is, again, drawdown. And it's how to space these entries and go for these targets. So again, the other thing I'm looking at with it as well is time frame. I've tested a little bit on a M15 and it's absolutely brilliant at times, but then you get squeezes like this and you just get left with propulsion gap after propulsion gap after propulsion gap, and it doesn't stop this squeeze, doesn't help you with the squeeze. So I'm looking at hybrid stop loss strategies with it as well. So there's a lot to be worked on with it, really, which is why I kind of dropped sentiment, because I started working on this and I got some amazing results on the 4-hour time frame. But what I found on the 4 hours, you can see here, this is a perfect example. You get a lot of orphaned gaps on the 4 hour, whereas when you jump down to the hourly, you get a lot less orphaned gaps. In this case, you've got quite a few, but you get all these ones here, here, and here, which filled. That one there filled. That one filled. So you got all of that movement, and that movement there, when you measure it, is 202 pips, which is 4 ADR. So, you know, it's deciding whether or not to turn this into a swing-based strategy or whether to turn it into a kind of scalp strategy where you just target the closest gap. There's no right or wrong, again, with everything in trading. We never know, do we? But we know propulsion gaps get filled 90% of the time. When you're in a squeeze, though, it's not going to help you. And I've already got a position trading strategy, which I'm quite happy with. So I'm just trying to find a way, the best way to trade it. But that's basically what I'm working on at the moment. in most scenarios, it works beautifully. But also you've got the other thing, how far do you go back with the propulsion gaps as well? Because the older ones are the ones that get orphaned. So what we want to be concentrating on, I think, we look at an hourly time frame, is a time period cutoff for these. And I'm looking at a month. So you can see this is the monthly support resistance line, this purple one here. So I'm basically looking at using a month to be the very, very maximum for the strategy. So we're going to have trades which are going to play out over 2 to 3 weeks. And we're going to have some that are going to play out very, very quickly. But, you know, things like, and also size of propulsion gap. Again, looking at it, what I'm finding is that the larger propulsion gaps are the ones that take the longest to fill. There is a tiny propulsion gap that will usually get filled a lot quicker. So if you've got a massive propulsion gap, I want a filter to exclude those. So there's so much testing to do. I've had lots of profitable runs on it with what I've got so far. So, but you know me, I do everything to the nth degree. So I ain't letting anything out until it's tested to death. Can you explain with the market reversal alert EA how setup works? I don't know what you mean, non-care. If you want to know how it works, go to the website. If you go to the market reversal alerts EA page on the website, which is there. There's a massive video, 2.5 hours long, which explains how to set everything up in detail, fully chaptered. And all the strategies, the main strategies are there as well. And you've got all the indicator videos. I can't go through it in here because it would take me 2.5 hours. It's all on the website though. I thought you had mentioned an EA that would close out if you were in profit at end of day. Yeah. Yeah, so that was the sentiment one. It seems like the EA will only take position if my PC is on and MT4 is open. Is that a joke, Tom? Is that just an EA thing, or is there a way I can allow it to take trades when it's off? Are you joking? If your computer's turned off, nothing works, does it? Because it's turned off. I don't know if you're joking or not. If you're not joking, I'm going to assume you're not joking. No, computers only work when they're turned on. So exactly the same way as if I do that and close my thing down, I can't take a trade, can I? The EA's just taking trades on your terminal. If your terminal's shut, it's not going to work. Sorry, I never know if people are... Some people are new to EAs. Yeah, some people are new to EAs and they don't understand how they work, which is fair enough. Everybody's got to learn this stuff at some point. So yeah, oil news, 3:30, someone's just pointed out. So yeah, basically, if you want your EAs, there you go, there's your gap fill complete, everybody. Ta-da! You heard it here first, Monday last week. Yeah, so basically, if you want to run EAs, you need to have them on a VPS. So you need to rent a VPS, install your MT4 terminals there, and then basically just about to get in long, not far away. So I'm taking an entry 30 pips away. 76.60 is my entry. 76.60. Pretty much where that black line is my entry. Yeah, so you need a VPS, basically. And all the VPSs is a PC, which you remote connect to. Install your MT4s on there, put your EAs on, leave them, don't touch them. If you, especially with my EA, because it does drawdown control, if you have drawdown control turned on, if you start closing it and opening it and closing it and opening it, it will confuse the hell out of it and it will do all sorts of things. So you basically set it up on the chart, you let it run, you don't touch it. touch it, it will break. Steve, what about filtering the gaps outside of ADR or monthly ADR or something like that? It's a good option. Yeah, the trouble the trouble with the strategy is, the trouble that I'm finding with the strategy is there are so many options. It's trying to find something that is consistent and low drawdown. So, for example, here, this propulsion gap that went in there was virtually filled. So that would have been ignored. That one is tiny, probably left alone. So as we pushed down, there was no more propulsion gaps here until we got that push down there, and then we broke to the downside. So at that point, I would say, right, we've got a valid upside target. But at that point in time, we also had two huge valid downside targets. So what I have looked at is when these downside targets are completed, then we start to trade long. But some of these get really, really old. And this is why I said you need a cutoff point. So, for example, where we are here, that is what, 976 candles. Call it 980. Yeah. So all the propulsion gaps beyond 1 month now have disappeared. So we're not paying attention to any of those. These are still in play. So when do you cut off? So that's a month. So this is showing a month's worth of movement. You can see that everything bar that one and that one within a month has been filled. But if we use a month, you've become a swing trader because we're playing swings within a month. So I was looking at trying to cut that down to a shorter period. So 500. Yeah. See now what's disappeared? That old thing up there that was an orphan, this big old one there that was an orphan. So what we're concentrating on now is roughly 3 weeks. So going from here back 500 candles is to there, which is Tuesday last week. So there's Tuesday, that's 1 week, 2 week, 3 week, 4 week. So it's 4 weeks worth of trading. So as you can see here, now, well, they're all on the screen. As we were coming down here, there was no propulsion gaps here. So when we got down to here, that was a valid target, but that was pretty much closed. So when you drop down, that is a valid target because there's no downside targets here, look. So we should have been longing it from here with that as a target, and then it pushed down further. So we get in long again, but because we got one position there and a position there now, this becomes the target. The closest propulsion gap that is above the average becomes our target. We would have hit that target there, right? Because that didn't fill, what do you do next when you're out of that position? So I need a way to trigger myself back into that trade again if that gap is still in play. This is where the logic comes in. There are so many different ways to play the logic. That's what I'm struggling with, is trying to find the best way to do it. So I can make it work beautifully and make it get out of a trade and make a profit. But then it tries to get in immediately again because there's still a target there. So I have to teach it, right, now you need to wait. So what's the condition for waiting? Do we need to push down a certain amount of distance and have that gap still in play? If so, what distance and over what period of time? Yeah, so see what I mean? This is what strategy development is all about and why it's so complicated. I've got to build all this logic into an EA to test all these variations and permutations of what we could possibly do with the targets and the strategy. So, but yeah, moving outside of ADR. So if prices hit ADR, get in. That would be a logical way to do it. Because we know that that is only going to happen 42% of the time, isn't it? We're going to push outside of ADR. So that would make a logical way to do it. So yeah, I'll have a think. There's all sorts of things going on in my head about it. So crude supply. Yeah, so let's have a look at crude. So yeah, oil is moving. We've still got a lower high though at the moment on the hourly. So look at that for a support resistance bounce, everybody. Ta-da! What if you only target gaps on the current leg of the EA? On the current leg with the EA, once a high or low is cleared, move to the next. Yeah, so basically the idea is to adjust your target. So let's say, for example, we got in short here and targeted the propulsion gap. That trade played out. Yeah. Then we push away. We've still got that propulsion gap in play. So what we now need to do is we need to break that high, I think. But I think ADR, using ADR as a measurement, maybe 80% of ADR as a measurement might be something good to use. We would then take another short and targeting that gap there. But if there is another propulsion gap that forms, we target that one. Yeah. High probability it's going to do that at some point, but we don't know when. So what I'm trying to build is something that gets in and out the market regularly. And, you know, so like it didn't manage to fill that one. It didn't manage to fill that one. It did manage to fill that one. So if we could get an average price above that propulsion gap, we would exit at that propulsion gap. We can still get in now and our target would be there. It will either hit our target or it will push away and make another propulsion gap where we could take another entry and get out at that target. If that one wasn't hit, then we wait and get in again. You see, so there's so many ways of doing it. But what we need is a trigger that puts the odds in our favor. And the trigger that I want to use is there are no propulsion gaps to the left. There's no propulsion gaps above me that I am aiming for. I have them all filled. And that is where my problem is coming in with timing, because the reason that happens is based on that setting. This is a bad example, but because this has been rallying so hard. But normally you would find propulsion gaps above you depending on the setting you have. So there's so many variables. You know, right now, if I was to get in short right now with a scalp, I'd be targeting that. Scalp. If I'm using a swing, I'll be targeting that. Where do you get in? Where do you get out? It's a very difficult one. Trust me, I've tried lots of variations. They all kind of work to a certain degree, but they all have negatives. And I'm just trying to eliminate as much of the loss or drawdown, depending if there's a stop being used, as I can. Steve, trades still run when the PC is off. As you can see them all on your MT4 app, but the EA is not running, so you can't trade yet. Exactly. Tom, good point. I'm pretty new to EAs and I was manually trading on TradingView before. Yeah, TradingView is obviously cloud-based. So that's what you need to build, is a cloud-based trading platform for yourself, which is a VPS with your MT4s running. It's 12:30 a.m. The brain isn't working too well. I think it's time for bed. Yes. You had me at low drawdown, said every prop trader ever. Exactly. This is kind of what I'm doing. I'm trying to develop some prop, because position trading is great for prop sometimes. Right now, terrible, because you get into squeezes. Scalping is great sometimes, but it's not consistent. Good for prop, good to make money with on short term, but difficult to keep going long term. So I'm trying to develop a strategy which is kind of a hybrid that uses a stop, but uses a wide stop and a target we know is achievable, or a position trade where we will get out with a set amount of loss if we haven't had a propulsion gap target headed for. Yeah. So obviously it's all mean reversion. Propulsion gap fills are all mean reversion, because what we are looking for is price to push away and then revert to the mean. Yeah. So it pushes, leaves a propulsion, leaves a propulsion, leaves a propulsion, leaves a propulsion, comes down, fills that propulsion, pushes up, fills that propulsion, missed it. So you can't target the furthest one. You need to target something closer, but which one? Again, there's so many variables. So I kind of need to create a logic that works on the size of the propulsion gap, the distance of the propulsion gap, the number of entries you have. You know, there's a lot. I kind of need AI. That's what I might call it. The what's the name of it? I can't remember. It's not machine learning, is it? I'm trying to think. What's Agimat called? I can't remember what it's called now. Anyway, you know what I mean. I'll give it some fancy name like the AI machine learning propulsion gap targeting system. Everyone will buy it. Amazing. I want it to work first. Neural network. That's it, Luke. Yeah, so it's the AI neural network propulsion targeting system. What's it going to be called? Got to get it working first. Where am I targeting on oil? High. I haven't got a target. So $95 a barrel is the initial target. So 95 a barrel is there. Yeah, so that is what gold. So the initial forecast from the institutions, Goldman Sachs, those types of guys, was 107 a barrel at the beginning of the year. Yeah, which was back here. They were calling 107 a barrel. What we then did was move sideways for 2 months, nearly 6 weeks or so, and then we put a big drop in. So they reduced their forecasts down to 95. So they reduced their forecast by $10 a barrel, basically $12 a barrel. That was our new peak formation low, which we then started to rally to. So I was looking for an opportunity of a pullback to get in long, which is when the gap happened. So my target is still the same, where the institutions are calling is $95 a barrel. So I will get in long. I won't set a target. Initial target, interim target would be 83, which is that high. So I'm assuming that market structure is going to be that. And if that is going to be market structure, obviously we need to break that new high. If that doesn't hold, I would assume that we're going to pull back into propulsion, which is this monthly low. Yeah, and that will become the bounce point for market structure. Yeah, so it's either longing off the gap fill or it's longing off a deeper pullback. That is a 50% retracement. $61.8 actually. That's a $61.8 retracement. So that's what I'm targeting, basically. I don't know whether this is the right spot to get in or whether I'm going to need to get in down there as well. But I'm not getting in tight on this. I've been burnt on oil. So these will be one ADR apart, at least. So first entry will go in ever so shortly. And then second entry will go in probably down there and play it back up. If it invalidates that propulsion gap there, I'd start to worry, because that's exactly the situation we got into back here. Yeah, when we were trying to long this thing, we were trying to long it, and all we kept doing was making new lower highs. Yeah, and we thought, oh, we're going into a symmetrical triangle, break to the upside, and then it collapsed. So that was the invalidation point. Out. This is not right. So right now, that propulsion gap there, if that doesn't hold, so this is a big leg up and then accumulation and a pop. If that doesn't find buyers, something's wrong. So that's where I would start to get out and take a loss on it. So my risk on it is going to be around about 1.5% on that movement. It is about 1.5%, something like that. because it's a prop account. So I'm not going to, that's 1.5%. That's risk. That will be a 1% risk. So there'll be 2.5% on by the time it gets down to there, and that'll be a loss. It's a swing trade. So that is going to be around about 1.5% gain, 2%. Not brave enough to get in on oil. I will probably add to it as well. So if we break this high here, I will add a second position there for a run. So that will be higher reward if and when it gets there. So add to the winner on a swing. Prop firm propulsion. Propulsion. Have you asked ChatGPT or Bard? No. For prop gaps on 4 hour. For prop gaps on 4 hour chart, which use? I don't understand the question. I use hourly propulsion gaps myself. As I just said, the 4 hours, you get a lot more orphans on the 4 hour chart than you do on the hourly. If you drop down to M15 and look, you get a lot of gaps on, especially on things like oil where it moves very fast. On the slower moving instruments, the gaps get filled very, very nicely. So that's virtually done. Again, I want to also have a kind of way of filtering that out as well. Lots of stuff. There's lots of work to be done on it. Got my funded account with Fidelcrest. Well done, Brian. Good job. Is it better to scale in around support resistance and ADR levels? Yes. So if you watch the bootcamp, the way I used to teach the bootcamp, or the way the bootcamp is taught, is on a manual basis. So I was only just starting to use the EA. I always used support resistance as my scaling in plan, and then maybe one in between. So what I found was when you're using support and resistance, the vast majority of the time, the next support resistance is somewhere around about 1 to 2 ADR. So this is actually a really good example on the screen now, euro pound. So we're there at the moment. So roughly a couple of ADR away is the next major monthly support, resistance rather. So I would say, right, well, if I get in 1 ADR apart and we're already extended, chances are by the time we get up there, it's going to pull back. And that's what happens the vast majority of the time. We get into 2 positions, maybe 3, and then we exit. If it has to push up to there, that's going to be 3 positions. By the time we get to a resistance, you're going to find limit orders and it's going to trigger. And if it gets all the way up to there without having a pullback, it's going to be massively extended because you're getting in when it's already starting to be extended. Yeah, so that's how it works the vast majority of the time. So if you get in on an ADR extension or a resistance level or support level, those are your ideals. However, ADR, we only get hit 42% of the time. So what you quite often will find is you get an extension on RSI, it pushes up a little bit, doesn't hit ADR, does that, then it pushes up a little bit more, doesn't hit ADR, does that, pushes up a little bit more, doesn't hit ADR, does that. And actually what you've got is 1 position and you're 2 ADR away without having taken another trade. So there, what's happening is your average is now an ADR away with 2 positions. So if you scale in kind of 1 ADR, 3/4 an ADR to 1 ADR apart, you're always going to keep your average usually within touching distance, which is what you want. You need to keep your average within an ADR so that you can get out of the trade if you need to. However, obviously, when you get squeezes, there's nothing you can do about it. If the market's going to go into some crazy squeeze move, it doesn't matter whether you're scaled in at ADR, whatever. It doesn't make any difference. A squeeze is a squeeze. So have I covered EG? No, but I am now. We are just about to get extended on the hourly, 4 hourly, nowhere near. So, yeah. I mean, it's getting extended. So, potential for a pullback. This is a lovely resistance area here. extrapolate that out. There's multiple times we've reacted around this level where we are. We've rejected it. We're back up there again. So I suspect, as I've just been saying, that's where we're headed potentially on this. So we've got strength at the moment in the euro and the pound. The euro is expecting to get an interest rate rise next week, probably, possibly 0.5%, if not definitely 0.25%. So we're getting some bull runs into this at the moment. The Swiss franc is running, which is helping the euro as well. I'd be looking for shorts when we get extended above that area. I think now is the time as well to switch back to the 21 on the hourly from the 14 RSI. I said this last week. It's starting to get volatile now. We've got a lot of volatility entering. So if you switch back to the 21, you'll find obviously your entries are going to be a lot less. So you'll get into a lot less trades, a lot less drawdown, obviously. If we're going to start getting these big squeezes playing out, which we're starting to see a few of now. So when that volatility starts to rise, you want to make your RSI bigger, which is what I've always used, is the 21 on the hourly. So I think I'm going to start to scale back down into that now. David, would you be critical of one who manually entered a second trade on a position trade when they see it goes half an ADR and ADR against them, and the MRA is too far away to trigger a second trade when broken? Well, that's a complicated question. You can take manual trades whenever you want to. So if you're watching a trade and it's pushed up and you've found a good level and you think, I really like that, take it if you want to. Just be aware of the distance between your first trade and your second trade. If it's close, like a third of an ADR, you're going to basically be in double the amount of drawdown by the time you get one ADR ahead away from your initial entry, aren't you? So just be aware of the consequences of scaling in too close. If it's gone too far, the reverse alert CA is going to get you in anyway, isn't it? If it's gone like 1.5 ADR before you get a reverse alert, you're getting in. So I wouldn't take one on the way. If this thing's going parabolic, let it go parabolic. You take another trade there and it continues to go parabolic for 3 days, all you're going to do is you're going to keep scaling in. And that's grid trading. So if you get in on an entry, there's lots of grid trading strategies out there where it goes, I'm going to place a trade and then I'll place one this many pips apart. And what happens? You get a news event and it goes parabolic. What you end up doing is getting into 5 positions in drawdown and then it goes into an accumulation. Not good. You want to get in when there's signs of strength. When there's a reversal, there's a whole point of the reversal alert indicator is it's telling you the sellers have started to take control. So this is either going to turn into an M pattern reversal or it's a pullback and continuation. If it's a pullback continuation, that's what it is. If it's an M pattern reversal, we want to be in on it. But whatever we do, we want to be in when the signs of the market starting to move in our direction. Which is the whole purpose of it. People get the market reverse alert CA and they say, it's gone an ADR against me, but it hasn't taken a trade. Well, has there been a reversal alert? No. Well, then why would it take a trade? If the market's pushing up and going sideways and pushing up and going sideways and pushing up and going sideways, it's not reversing. So you don't want to get in, do you? Because it's going up. We get in when it's extended and there's signs of the market pushing back in our direction. That's the key behind the indicator and why the indicator gets in on those signals. We're waiting for signs of structure breaks back down, i.e. we are starting now to potentially fall from our dizzying height wherever we are. And obviously the more extended we are, the faster that tends to happen. Unless there's a fundamental problem, obviously, which something like a bank falling over. US dollar, the Dow rather, fell out of bed very nicely. So there's your opening range breakout to the downside. So the ORB on the Dow today was beautiful. One entry, hasn't looked back. Absolutely beautiful. Huge. 191 point profit straight down to ADR. The DAX, the Nasdaq, however, was a bit of a choppy mess. Still is an absolute hideous choppy mess. Look at it. Nasdaq was not the one to take today, whereas the other day, the Dow was not the one to take, was it? One or the other. Always one or the other. Right, that's all I've got for you today. See, look, we've gone on to an hour and a half again already. I've got to go and get some development done. I want to work on this strategy. So if you need anything else, let me know. I'll be in the Telegram group. Hopefully we're getting some pullbacks on some of these things. Starting, yeah, Euro odd is coming down nicely now. Look, so potential for this to be the start of the undoing. Euro CAD, huge bearish engulfing going in. Pound, again, same sort of thing. So we are getting some decent movement now kicking in across the board. US dollar CAD sideways, not really doing anything at the moment. But all these Euro pushes, Euro Swiss extended, we know that. CAD Swiss, the aggressive drawdown control positions I took on the CAD Swiss, 2 stop outs on those. Not good. Thanks for everything, Lee. You're the man. Oh, thank you very much. I'll be back tomorrow, same time, 7:50 and 2:20 tomorrow afternoon for the New York session. We'll have a look at what's going on with these. These look like very, very nice moves we've got going on at the moment. So potentially this Swiss franc may well be recovering now. There you go. Look, what did I say? We've properly jumped out of greed. That's where we were yesterday. We're sitting up at 68, straight down to 55. Market's going into shock mode. Another bank. So hopefully we will get some confirmation of that being bailed out, that bank, and obviously we'll undo all of this Swiss franc movement that we've had. Looks like it's starting now. So really good opportunity for aggressive moves. Okay, anything you need, let me know. I'll be in the Telegram group. Otherwise, tomorrow morning, 7:50 and 2:20 tomorrow afternoon. I will see you guys then. Have a good day.